The first thing I think the monetary policy guys need to do is that don't change your winning strategy. And one of the things that actually brought them this far is transparency. And their transparency actually heeded the trust and actually led to the reason why foreign investors can actually trust them with their money.
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi, Abasiekong. This edition, we'll be looking at Nigeria's inflation trajectory and monetary policy approach. Joining me for this conversation is Mr. Oladipo Ajayi. He's the head of the fixed income market desk for Chapel Hill, Denham. Nice to have you.
It's always a pleasure.
Let's first begin with global developments. As you know, that the US Federal Reserve, which is the central bank of the US, took that major step of cutting interest rates by 25 basis points. It has been an ongoing discussion. It's happened now.
Yeah.
What are the implications for emerging markets and frontier markets?
Well, for me, I would take it as a bold step on the part of the US Fed, and I would assume they were actually more to do that because when you see the inflation trajectory in the United States, of course, you would have expected a waiting game. But when you start seeing more like the government intruding in monetary policy decisions, that's what we see. Yeah, but the good part of it is that it's a plus to the frontier and emerging market. When you look at a country like Nigeria that is looking at actually grazing the Eurobond market later this year. So it simply means that they have enjoyed upgrading our ratings by two of the prominent rating agencies at the beginning of the year. It also means that we can also enjoy a better cost of actually raising these funds in the market. And aside of that also, one thing is that when rates is going up, what it does to a currency helps the currency strengthens. And so what that also currently means now that Naira can actually have a better hand against the USD, but that is not done in isolation. You have to now start looking at what are you doing locally to achieve that. But when you look at what we are currently doing locally, I think one way or the other, we are ticking all the right boxes. And maybe when you look at what the CBN has been doing and the monetary policy guys. So it makes sense for me to say that it's a very good one to emerging market and frontier market because they will actually be able to actually raise funds at a lower rate.
Yeah, you just talked about the fact that local economy like Nigeria, that we have to do things right. There's this whole conversation across economists, analysts, and even various international development agencies saying that the country is seemingly now moving from a risk position to recovery. What's your take when you look at the economy? Inflation for August reduced again for the fifth consecutive time to 20.12%. Growth seems to be a bit stable. But generally, from macroeconomic sense, how is this playing out?
I think everyone is right in that regard because when you put January last year side by side with August this year, you will see glaring that we have moved from where we used to be to a better platform. And at that particular point, a lot of people were feeling the pain. And I was telling some people sometimes it's the pain of childbirth because at that particular point in time, it will be very painful. You even pray that maybe that should stop at that particular point, and that was the agony that Nigerians were actually going through. Because if you remember February last year, the central bank went bullish with 400 basis points at the first meeting after the new central bank governor was actually brought online. And just 30 days later, they did another 200 basis points. What would be the impact on people in business? What will be the impact on merchant transferring company? What will be the impact on the economy as a whole? And a lot of people even thought that it wasn't the right decision at that particular point in time. But one thing is that we need to survey the country we are currently in at that particular point in time. So when you look at where we were coming from and where we are currently, I think we have actually, when we are navigate the curve, we are now, the economy has stabilized. And if you want to test that, look at when now that you can now use your Naira card on international platform. I remember the last time we were able to do that should be maybe past 4 years or so. So it means that the market is stable. And also the introduction of FM market in December last year also, I think that also helped that because to foreign investors, what it means to them is one more like transparency. You also brought about price discovery. And another great thing I also noticed that the CBN did was after the Liberation Day, that was April 1st, we saw a bit of volatility in the market. What you would have expected is panic. And you start seeing, oh, maybe trying to adjust policy just to ensure. No, what they did is that they allowed the currency to trade. What they did was that they come in intermittently to support when they need for that. And that is how we actually found ourselves here. And when you look at inflation also, inflation has actually dropped at the 5th consecutive time. And this time around, a lot of people call it wrong because when you look at the rate of drop over time, it cannot be compared to what we saw at this last release from 21.88 to 20.12. And so it makes a lot of sense that to say that I think we are getting closer to that. But we cannot look at that figure in isolation. We also need to dissect the figure because when you look at food inflation, it seems that we are getting it right in that regard. And also, don't also forget this harvest season. So you expect that to also impact on that. And also another thing also we need to now look at what is happening in core inflation. Core inflation that we saw month on month, core inflation actually went up month on month. But when you look at year on year, it actually dropped significantly as well, from about 21.38 to about 20.10. So it makes a lot of sense to say that we are getting closer to that. And it simply means that all the while we have been taking the right decisions and we just need to continue in that state.
Very important. Now let's look at you've said that yes, inflation has been on the slide, which is looking positive. Food inflation following that trend. Now, monetary policy, therefore, will begin to take positioning. And so as we are bracing for the monetary policy decision this week, what are the options? What are we seeing? Are we going to see a dovish approach, hawkish approach, or what should we expect?
I think we could be likely see mixed when it comes to the party sittings on the table because they're monitoring inflation over time, and to some, they will feel that it's time to start actually releasing the tightrope. And to some, they will say we may need to hold it a little longer. And what will likely inform the decision of the ones actually asking for releasing the tightrope is premised on the fact that inflation has dropped. And also, we've seen the hand of the US Fed also, which also mean that one way or the other emerging or frontier economy also can actually toe the path. But my own concern is that I will actually toe my line with people that should hold it a bit longer. Holding a bit longer is to just see what happens between now and November. I don't want us to get to a level where we'll be doing more like policy somersaults, where after cutting rate, we'll go back to actually rolling it back. The sudden drop we saw in the months of August, I think we need to see it once more to be sure that it wasn't a fluke. We also need to look at what's happening on the core inflation part that I mentioned. So when you look at this, there's no room for hurry. The central bank can do many other things to actually reduce the pressure, but not touching the MPR. You would have seen that since last week, we've been seeing a lot of liquidity in the system. This is unusual of the CBN. As of yesterday, the market opened with about 2.8 trillion worth of liquidity. It's unusual with central bank. Market has been anticipating an OMO issuance. And also, if you have checked the trajectory of the central bank in the last weeks, what they've been doing more like a short-dated OMO bill. So it also sent a signal to the market that we are not desperate to actually take this thing to next year. So what we are working is maturity that will actually crystallize this year. And so the central bank can use many other ways to actually release the rope, but not touching the MPR, pending when we'll see what will happen between the month of September and November. But if they actually ended up actually cutting rates, I will not expect anything beyond 100 basis points. Because if we do more than that, I think that will actually put a bit of pressure on currency, and we may now need to start opening our reserve again to actually salvage the situation. I think we need to take a clue from what happened in Ghana. For a long time, inflation was dropping. Ghana kept the rate at a stable level. But it got to a level that they knew that it was clear to everyone that this time has come for them to actually start cutting rates. Just some days ago, they did 350 basis points. And we have seen that in the past meetings. So we can also actually toe that line as well. Wait until when the coast is clear, then we can actually make a decision that we will not live to actually regret.
Yeah, wait till the coast is clear. So let's look at the outlook for monetary policy beyond 2025. What should we anticipate? What should we expect? With what you've said, they can wait, they can hold, or they should not cut beyond 100 basis points. We will anticipate that when the decision comes out on tomorrow, which is MPC Day. But beyond 2025, what do you see as monetary policy approach to stabilize the economy? Looking at what has happened in the foreign exchange market, some level of stability, and other factors, macroeconomic level.
So the first thing I think the monetary policy guys need to do is that don't change your winning strategy. And one of the things that actually brought them this far is transparency. And their transparency actually heeded the trust and actually led to the reason why foreign investors can actually trust them with their money. When the central bank came on and they actually released the net reserve position, it was a great one because the international companies felt that, oh, it seems there's a new Shari truly in town. And when you are now look at what they've said over time, it's more like a talk and do administration. From stopping FX net open position to bank recapitalization, to just name it. And what they have been doing is that they name it and they actually ensure that they actually do that. So that is one thing they need to do. They need to continue to actually ensure that their word remain their bond. And another thing also that I also think that they need to do is they need to also watch inflation closely. Because inflation is one of the things that's actually may affecting Nigerians. Because when you look at a country where you have double-digit inflation, and not even in the 10 levels, but in the 20s level, even in the 30s levels. And of course, what that would do, it will erode the purchasing power of Nigerians. So they need to watch inflation closely, and that is one of their core functions, price stability, and that is what they also need to watch as they go into 2026. While they're actually celebrating what they've actually achieved in 2025, they need not to actually just slip over that. They need to continue to actually walk around that to actually, because we've been in this country before where inflation band was between 6 and 9. As in 2013, we were averaging around 8.something%. Yield were around 10%. What was cost of borrowing at that particular point in time? So if you are able to actually bring inflation to a single-digit corridor, what it will mean that to the economy is that it will improve the standard of living of people, and it will also reduce the burdens that companies are currently carrying. Imagine you have inflation within the corridor of a single digit. It means that let's say NPL at 12%. It means that you can actually borrow money at 15%, and you can now imagine the level of impact that will have on businesses, the level of that impact that will have on Nigeria as a whole. So the central bank need to also work in that regard to ensure that. And also on the FX front, they need to ensure that they have a firm grip of that. We've seen what they've done in the MFM window, but I think we need to take it a notch further. And the only outstanding thing I feel was still on the table is the broadly change the capitalization exercise. The central bank needs to follow it to the end. We need to get to a level where the whole system of the bureau is digitalized. You can sit on your table and you can see all the prices from the registered bureau de change on a system. And with that, you can see the level of transaction that is going through in that window. And at the same time, you can now know, because what that would do, it brings about price discovery. It won't be that, oh, the prices of dollar in Abuja is at this price, but in Lagos is at this price. So what that arbitrage opportunity will actually fade and die automatically. And so if they are able to do that, that will also improve the level of liquidity that's coming into the market in that segment of the economy. And I think that 2026 will be a great year. And my view is premised on the fact that by the time we kickstart the tax policy in January, and also you have people tax ID tied to their accounts, it will reduce the level of cash movement into the dollar market that is putting pressure on the economy and the likes. So with that, the government cannot come and tell us that, after paying FAC, we are not seeing pressure on the FX market. You must be able to see that because you can see the way the funds are moving, and that you can actually query and question why funds are moving in that direction.
Very interesting insights. I'm not forgetting that 2026 is a pre-election here.
Yeah.
Very interesting insights. I like the fact that there's need to digitize the bureau de change operations.
Yeah.
I like the fact that the MPC should continue to put a watch on inflation trajectory. I like the fact that we need to do everything possible to take inflation back to single digit, which will have impact on companies and, of course, the living standards of Nigerians.
Yeah.
But most importantly, you like the fact that there's a lot of transparency now in the activities of the monetary policy team and the central bank. So that should be sustained.
Exactly.
Thank you very much for this interesting conversation, Mr. Oladipo Ajayi, Head
of
Fixed Income Desk, Chapel Denham. And we will be watching the MPC decision
to
see
very
if
much
there will be a hold or a cut and what level of cut it will be if that happens.
Yeah.
Thank you once again for the time.
Thank you very much.
Thank you. Thank you. So viewers, that will be all for this conversation. And of course, if you want to get further insights on this, log on to our website displayed on the screen and follow our social media handles. Till we come your way again, I'm Ottoabasi. Thank you for watching and bye for now.